10-year Treasury yields dropped pretty sharply. We broke through the 20 and the 50-day moving average yesterday. Fairly big move on that trade deficit number we saw yesterday, as well as the ISM services number, all suggesting the economy is a lot weaker than suggested. That's bringing down yields across front. We're still on a pretty decent sell signal on yields, suggesting that yields can go lower as the economic data continues to weaken. And at least that seems to be the trend at the moment, that we're going to see some slower kind of bouts of economic data, and that should bring yields down here over the course of the next couple of weeks. Here's what you need to know before the bell this morning. Yesterday had a very good day in the market. Started out just a tad weak, and we talked about yesterday we were sitting right on the 50 and 20-day moving average, and so that support level needed to hold yesterday. We opened up just a little bit weak yesterday morning following the announcements from AMD and Google, and those were the big kind of losers yesterday in the market. But, kind of expectations were those going to take the whole market down with it. Wasn't the case. Immediately, the markets kind of turned around, started rallying back, came right off that 50-day, 20-day moving average support level, rallied up, and had a nice finish to the day. So, again, that rally, and we talked about this yesterday, that kept the MACD sell signal from triggering. So we're still on a buy signal right now, just barely. But the market's in a bullish trend at the moment. Relative strength is improving. That's giving a lift to the markets at the moment. So again, technically, everything is fine in the markets. And despite the disappointing news that we saw out of Google and AMD and others, there was actually a whole lot of buying going on yesterday within the overall market. Money flows continue to creep up here. And we saw a lot of buying. For instance, in AMD, as a good example, AMD's had a long stretch of negative money flows. Those went sharply positive yesterday. So there was a lot of buying in AMD stock yesterday, even though the stock was down. Stock opened down about 9%, almost 10. Finished the day only down about 6. But there was a lot of buying all day long. Those money flows went positive. So we'll see if we get some carry through in the semiconductor space over the next few days as we kind of see that. But again, in the overall market, everything continues to be doing just fine. And some of this latest data that we've seen coming out has certainly been helping the bond market as well. 10-year Treasury yields dropped pretty sharply. We broke through the 20 and the 50-day moving average yesterday. Fairly big move on that trade deficit number we saw yesterday, as well as the ISM services number, all suggesting the economy is a lot weaker than suggested. That's bringing down yields across front. We're still on a pretty decent sell signal on yields, suggesting that yields can go lower. We are a little bit oversold on yields temporarily, so a bit of a bounce. As long as we stay within this downtrend, wouldn't be surprising, but see yields come up to maybe 4.4, 4.5, work off some of this kind of oversold condition that we've got, or overbought condition, because interest rates are inverted, but kind of work that backwards and work some of that off, and then that would allow yields to continue to come on down as the economic data continues to weaken. And at least that seems to be the trend at the moment, that we're going to see some slower kind of bouts of economic data, and that should bring yields down here over the course of the next couple of weeks. Lots of support around 4.2%, 4.3%. So again, that's going to be the next big initial test for yields, is around that 4.3% level. If we break below that, you're going to very quickly get down into 3.94. So, but again, if we're getting down into that level, we're going to be seeing much weaker economic data at that point. So we're not there just yet, but we are starting to correct some of that term premium that we had discussed here on the show, that kind of plug number between where rates are and where they should be based on the fundamentals. So we are kind of working through that process. We talked a little bit yesterday about the dollar as well. The dollar has kind of really been volatile as of late. Lots of movement, kind of up and down, back and forth over trade announcements, tariffs, all those type of things, and that's been really creating a lot of fluctuations in the dollar. But the dollar's holding right onto the 50-day moving average right now on a sell signal, so it is trying to weaken here a bit. That would help reduce or basically reduce monetary tightness within the system. A little bit weaker dollar here, and the dollar is really kind of in between being oversold and overbought. So again, kind of flirting with support here, but we may see that dollar weaken up here a bit over the course of the next couple of weeks. So we'll keep a watch on that. That should help buoy stocks if that occurs, and we do see a little bit of a weaker dollar here. That's what you need to know before the bell this morning.